did you? Anything you want.
5 reasons to buy silver instead of gold. Is silver really better than gold? Why should someone buy silver instead of buying gold? What potentials does silver have as an investment? All these questions will be answered right here. It is natural of an investor to be curious and want to discover if one type of asset is better than another. This is particularly true when it comes to silver and gold, since both markets generally differ in size. Money and silver. Silver isn't part of our currency, yet it is still considered of value along with gold. One evidence is that this cannot be generated easily and thus depreciates like paper or digital forms. And by real money, we do mean physical silver, not ETFs or certificates or futures contracts. Here's why silver and gold has potential value: they have never been defaulted on. They have no counterparty risk. They have long-term use as money. So as a general overview, owning physical silver gives you a real asset that has served as money for thousands of years. Silver is practical for small purchases. Silver itself is not cheap to buy but can be more practical when you want to use it. Perhaps you don't want to use a full ounce of gold to meet a small financial need, hence silver could be of more potential value. Since it frequently comes in smaller denominations than gold, you can sell only what you want or need at the time. Silver outperforms gold in bull markets. The market for silver is so small, in fact, that a little money moving into or out of the industry can impact the price to a much greater degree than other assets, which include gold itself. This higher volatility rate also signifies that in bear markets, silver falls more than gold but soars further and higher than gold in bull markets. Global demand is growing. World demand for silver is already growing. Almost all major government mints have seen record levels of sales, with most already operating at peak production. Rising demand, especially in China and India, is very evident in today's world. Both countries have very long histories when it comes to an affinity with precious metals. Thus, since these surging demands don't happen so often, there will be consequences later when rising demands meet low supply. Silver is a hard asset. There are a limited number of investments that you can hold in your hand. Silver and gold are one of them. The markets are full of paper profits, digital trading, and currency creation. However, this is in contrast with gold and silver investment options, as these are one of the rare few you can store, hold, or even have in your pocket. And it can be as private and confidential as you want. Physical silver is also a tangible hedge against all forms of hacking and cybercrime. So generally these are some of the reasons why silver is generally better than gold and why investing in silver is also a good option. Not only does it diversify your portfolio, it also has many more benefits along with gold and other precious metals. The next silver run to $50 and beyond. Twice in the past the price of silver has risen in a short period to $50. It happened in 1980 during the Hunt brothers manipulation and again 3 decades later in April 2011, when the price rose to nearly $50. Prior to the price run-up in 2011, I wrote that a move to $50 was more than possible, since it had already occurred and that proved such a move was possible. Something that has happened twice before can certainly occur again. One thing that makes it probable is that there was 3 times the amount of silver above ground in 1980 than there is today. The 6 billion ounces that existed in 1980 has shrunk to 2 billion ounces of industry standard 1,000 ounces bars. The amount of world money creation and buying power has increased exponentially over the past 7 years. It is nothing short of extraordinary that there is less than a third of world silver inventories remaining today than there was in 1980, while the price has remained far below the peak it reached back then. In 1980, there were less than 3 billion ounces of gold in all forms above ground throughout the world, the cumulative production of thousands of years. Today, 38 years later, the total amount of above-ground gold has doubled, thanks to an explosion of gold mine production. While silver mine production has similarly exploded over the past 38 years, there is much less silver around now. The explanation for why there is so much less silver and so much more gold is that silver is a vital industrial commodity, consumed in a wide variety of applications, while gold is not. Silver lost its primary consumption use, photography, due to digital displacement, but despite this loss, a myriad number of new uses powered silver's continued consumption. Unlike silver, the price of gold is substantially higher than it was at its peak in 1980. There is no minimizing the powerful dynamics in place for the next move higher in silver. That move should extend far beyond the $50 barrier of the past, and, when the move does start, it will most likely unfold much quicker than the previous big moves. When it occurs, most observers will be dazed and confused. The principal dynamic of this coming big move in silver and gold will be the role of J.P. Morgan. Over the past 10 years, as a result of its government-assisted takeover of Bear Stearns, J.P. Morgan has been the dominant futures, paper, short seller on the COMEX, becoming so powerful that it has compiled a perfect trading record, never once taking a loss and amassing many billions of dollars of trading profits. As remarkable as this unblemished trading record of the past decade has been, it actually pales in comparison to what J.P. Morgan has been able to accomplish in the physical market. It has used the highly depressed prices it largely created to accumulate on the cheap 750 million ounces of physical silver and 20 million ounces of physical gold. The accumulation of such a massive private hoard of physical silver and gold, by far the largest such amounts in history, is the single most powerful argument that the coming move higher will be one for the record books. J.P. Morgan is the unchallenged master of the financial universe, and it didn't go to the trouble of accumulating such massive and historic quantities of physical silver and gold for a quick trade or a small gain. It did so in order to make the largest profit in history. I understand that many doubt my claims that J.P. Morgan has amassed 750 million ounces of physical silver and 20 million ounces of gold. After all, aside from the near 150 million documentable ounces of silver that J.P. Morgan holds in its own COMEX warehouse, proof of the other 600 million ounces that JPM owns is notably missing. Certainly, if the entire 750 million ounces could be seen by everyone, there would be no debate. It is precisely because most of the silver held by J.P. Morgan can't be seen that makes my claim noteworthy. As it stands, J.P. Morgan's accumulation of physical silver and gold is mostly unknown. I think this is a good thing, because when silver does fly higher, no one will be pointing the finger at J.P. Morgan. They will skate undetected to many tens of billions of dollars of profits, with the world blissfully unaware of the real story. It is in J.P. Morgan's self-interest to hide from view as much of its silver and gold accumulation as possible. Even though the 600 million silver ounces held by J.P. Morgan are hidden, I have described in detail to subscribers, and in public articles, the three main means by which it has acquired the metal on a weekly basis going back at least 5 years. First was via skimming off a small portion of the unprecedented, yet documented weekly physical movement in and out of the COMEX silver warehouses, an inventory movement not seen in any other commodity. Over the past 7.5 years, more than 1.5 billion ounces of silver have physically been moved in and out of the COMEX silver warehouses, of which J.P. Morgan has skimmed off at least 200 million ounces, apart from the 144 million ounces it holds in its own COMEX warehouse. Next, J.P. Morgan bought at least 150 million ounces of silver American Eagles and Canadian Maple Leafs from 2011 through 2016, melting every coin into industry-standard 1,000-ounce bars. J.P. Morgan's buying alone accounted for the string of record sales years, and when it stopped buying, sales of these coins collapsed. Finally, as the official custodian for SLV, the world's largest silver exchange-traded fund, ETF, JP Morgan was ideally positioned to convert shares in the trust to metal and avoid all ownership reporting requirements. This alone is the explanation for the continuous counterintuitive deposits and withdrawals in SLV over the past 7.5 years. All told, JP Morgan picked up at least 250 million ounces of physical silver in this manner. All three of these accumulation methods by JPM were reported weekly to subscribers for years, and I suppose anyone not privy to the reporting would doubt it had occurred. Not much I can do about that. As great as JP Morgan's massive and historic holdings of physical silver are, remarkably, there is more. Not coincidentally, the more also involves JP Morgan. At this time, it is accepted that the futures market structure in COMEX silver and gold, and other metals, is the most bullish it has been in history. Specifically, the level of short selling by the managed money technical funds is the highest it has been in history. This is clearly bullish as these technical fund shorts have no choice but to buy back their short positions at some point and switch, or try to switch, to the long side. Thus, a massive amount of potential buying is already in place, awaiting only the eventual occurrence of higher prices to be set off. While the current bullish market structure in COMEX silver and gold is reasonably well known and written about, much less is known about JP Morgan's role in forming this bullish market structure. CFTC data verifies that JP Morgan has been, by far, the largest purchaser of COMEX silver and gold futures contracts over the past couple of months. In other words, not only has JP Morgan been the largest buyer in history of physical silver and gold over the past 7 years, it has also been the largest buyer of COMEX futures contracts on the deliberately engineered price decline of late. By my calculations and based upon CFTC data, JP Morgan has bought back 20,000 COMEX silver short contracts, the equivalent of 100 million ounces, and 90,000 COMEX gold short contracts, the equivalent of 9 million ounces. How many more COMEX futures contracts can be bought by JP Morgan is anyone's guess, but based upon the record short selling by the managed money traders, it wouldn't appear that JP Morgan can buy many more COMEX contracts. After all, the record managed money selling is what enabled JP Morgan to buy so many contracts in the first place. Once that selling dries up, JP Morgan is unlikely to be able to buy many more contracts as a result. It is the highly concentrated nature of JP Morgan's futures contract buying that sets the stage for an upside price jolt that promises to unfold faster to the upside than any previous move. So deft has JP Morgan been in buying gold futures contracts recently that I have taken to describing it as a double cross of other traders. But once the move higher unfolds, it promises to be the largest rally in silver and gold in history by virtue of the massive physical hoard accumulated by JP Morgan. Amazingly, all it will take for this price explosion scenario to unfold is for JP Morgan not to add aggressively to short positions when the inevitable rally begins. You heard me right, the silver price explosion to $50 and beyond, along with a commensurate move in gold, is only contingent on JP Morgan doing nothing on the next rally. Admittedly, JP Morgan has been in many similar setups in the past and has always added aggressively to its COMEX short positions, eventually capping those rallies. This has prompted many to assume that JP Morgan will always sell short aggressively on future rallies. But the current setup has never favored JP Morgan this much. If what JP Morgan has always done holds true again, we will get a rally of some significance anyway, just not the big one. But if JP Morgan doesn't add to short positions on the next rally, the third run to $50 silver and beyond should be at hand.